Welcome, everyone. Today we're doing a deep dive into, well, the journey of a sale.
That's right. From the moment it's entered into a system like SSB accounts all the way through payment.
And reconciliation. We want to unpack the behind-the-scenes mechanics.
Exactly. Our goal here is to sort of demystify this whole process.
Show how the automation works, the accounting principles involved.
And ultimately, how it gives you those real-time financial insights that are so crucial.
Okay, so let's jump right in. Creating a new sale. You go to the Sales tab, right?
Yep. Sales tab, then create new sale.
And right away, the date pops in automatically. It needs a unique invoice number, too.
And what's fascinating here, I think, is the efficiency built in from the start.
Like the quick add feature.
Exactly. For customers, for products, it speeds things up, but also capturing key data, like the customer's state right then and there.
Why is that so important, that very first step?
Well, it's critical for getting the GST calculations correct immediately. It avoids headaches down the line.
So it's thinking ahead about tax compliance from click one.
Precisely. It prevents those common errors you see with, let's say, less integrated setups.
Got it. Okay, so we've got the customer, now we add products. The system often knows the rate includes GST, maybe like 5%.
Yeah, it might have a default setting like that. And the key benefit here isn't just, convenience.
It's about the tax handling again.
Yes. This is where the software really does the thinking for you. It automatically figures out the GST treatment.
You mean CGST and SGST versus IGST?
Exactly that. CGST and SGST if it's an in-state sale, IGST if the customer's state is different.
And the system knows.
It just knows, based on that state information we captured earlier. It ensures the right type of tax is applied and reported, takes away a huge manual burden.
That's pretty smart. And then discounts. People love discounts.
Of course. And the system handles those dynamically. You can put in a percentage off or maybe a flat amount.
And all the numbers just recalculate.
Instantly. The subtotal, the taxable value, the GST amount, the final grand total, it all adjusts right there on the screen.
How cool is that? I mean, think about the time saved not having to double-check manual calculations after a discount.
Oh, absolutely. It eliminates those small errors that can snowball later. It's a huge time saver.
Okay, so we built the invoice, looks good, we hit save. It's still unpaid at this point.
Correct. But even though no money has changed hands, the accounting magic has already started behind the scenes.
Right. If you look at the reports, like the general ledger detail.
The GL detail, yep. You'll see entries appearing immediately.
Specifically, accounts receivable gets debited.
It does. And simultaneously, output GST and sales get credited.
Okay, let's unpack that from an accounting perspective.
Yeah.
What does that debit to accounts receivable actually signify?
It signifies an asset. It's money that your business is now owed. You've earned it, even if you haven't received the cash yet.
And the credits?
Crediting sales records the revenue you've just generated. Crediting output GST recognizes the liability, the tax you've collected on behalf of the government that you'll need to remit later.
So this is accrual accounting in action.
Textbook, accrual accounting. It gives you a much truer picture of your financial position as things happen, not just when cash moves. You see your real activity and obligations immediately.
That makes sense. Provides a clearer view than just waiting for cash. Okay, so the invoice is sitting there waiting for payment. How do we record that when it comes in?
Right, so you typically go over to the bank tab. This is where you manage your cash inflows and outflows.
And you can set up different accounts there. Like your main bank account, maybe even a petty cash account.
Exactly. You can add various accounts. Then you'd manually enter the deposit that came in. You might add a note like payment for invoice 123.
Okay, deposit recorded. Now, how does the system connect that deposit to the unpaid invoice?
This is the crucial reconciliation step. You look for an action like reconcile.
And the system helps you out.
It does. It's pretty smart. It will look at the deposit amount and suggest potential matches. In this case, it would likely suggest matching it to that invoice we created earlier.
So you just confirm the match.
You literally click match or reconcile and bam. The system instantly updates the invoice status to paid.
And that closes the loop.
Perfectly. The deposit is explained, the invoice is cleared. It shows how efficient automated reconciliation can be.
So let's look at the final impact. What does this completed cycle mean for the overall business reports?
Well, first, the general ledger updates again. Accounts receivable gets credited now.
Because the money isn't owed anymore.
Exactly. That asset decreases and your bank account gets debited, showing the cash increase.
So the books stay balanced.
Always. And beyond the GL, your main dashboard likely updates in real time. You get that, beautiful summary view.
Showing total sales, maybe top products.
Right. You get immediate, accurate insights into how the business is doing financially. This whole automated flow minimizes errors, saves a ton of time.
Allowing business owners to focus on, well, running the business, not just bookkeeping.
That's the ultimate goal.